strategy at Fundstrat. Welcome. It's good to see you.
Thank you, Scott.
So this is the pause that refreshes and we get something going finally, because we really have paused.
We did pause for about 7-8 trading days. Today was a day I think that leads us higher up to near 4,100, 4,120 by really the first part of December.
Well, why was today the day? I mean, and if we didn't get it today, what would you have said?
Well, we had a very defensive rally over the last week. Today was different, and then we saw leadership out of technology, out of materials, out of financials. It was a lot more broad-based, and markets did close at new multi-day highs. That is all important. Yields also have not shown any evidence of trying to recover, and that's also good news for stocks.
So 41 what?
4120 would allow the move off the October lows to equal the most recent. That's also where a giant trend line is from January. So that intersects right up above 4100.
Okay, so we get over the 200-day moving average, right? And then we can put a little bit more together because technically speaking, that's a buy signal for some?
Honestly, the 200-day has less relevance in my work than these longer-term downtrends.
Okay.
And that's going to be important. Look, breadth is in very good shape. We're seeing over 53% of
today it was
over 53% of all stocks are above their 200-day moving average. That's the highest levels we've seen since January. However, technology has not worked as well, and that is an important part of the market.
So what do we do with that fact that the biggest part of the S&P 500 hasn't worked, and we still think we can go further? So everything else is going to pick up the slack for tech?
It certainly has picked up the slack, and that's what we've seen over the last month. So financials, materials, discretionary, they're all up over 10% for the month. I'm not saying avoid technology, just be a lot more selective in what you buy.
What does that mean,
stocks like IBM, stocks like ON Semiconductor, they're phenomenal names. Even Apple has held its ground. It hasn't really lost substantially off the highs. That's relatively a good pick. But you have to really be where the strength is right now, which is energy, which is recently healthcare, pharmaceuticals, biotech, industrials, whether that be a late cycle type move or whether they're sniffing out an eventual rolling over the dollar. You've seen phenomenal movement in majority of that group.
Do energy stocks divorce themselves from the price of crude at some point? In other words, the genesis of that question is, well, for the last few days, crude's been below 80. Wondering what that means for oil stocks. Crude goes above 80 today. Does it make that much of a difference for where the equities themselves may go?
That divorce happened a number of months ago, and crude stocks have held up much better, energy in general, than WTI crude, which went from 125 down to nearly 75. Meanwhile, XLE, XOP, OIH, the majority of energy has continued to outperform on almost every time frame, 1 month, 3 months, 6 months. So there is a little bit of a disconnect. I think, crude is in a new bull market, which began 2 years ago, and I think that, I still think that crude is going to stabilize, and energy is still the right place to be, I believe, heading into next year.
And even so, I mean, the answer to the question is yes. I think you're suggesting that these stocks can go up despite the fact that if crude sits right here, the stocks can still work.
Look, trends and charts have certainly shown that. I mean, look at what's happening with stocks like Marathon Petroleum or Hess or anything. Look at the refiners. Look at Valero. Look at any of them have been really phenomenal outperformers. They're really one of the few places to be.
Okay, it's good seeing you here. Thanks.
Likewise.
Happy
Thanks,
Thanksgiving
Scott.
to you.
Happy Thanksgiving to you.
You and your family. We'll see you soon. It's Mark Newton.